Holiday lets have become really popular recently, so today we wanted to discuss all the different mortgage options that you have available to you. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us again. For those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 10 years. And he is also one of the founding directors here at WIS. Welcome back, Ifti.
Hi, Gemma. How are you doing?
Yes, really good, thank you. How are you today?
Yeah, I'm very well. Thank you very much.
Good stuff. Well, today we're talking about holiday lets. So I guess the first question that most people are going to ask is, what is a holiday let?
Okay. Holiday let, it's effectively you're buying a property, but to let out on popular destinations like close to a beach or close to a historic site where you let out the property for very short periods of time. It's a bit like an Airbnb, right? Mm-hmm. Airbnb sometimes fall to this category as well. So you are sort of renting it out for a very short period. So people come over the weekend or they stay over the holidays maybe for a week and they go away. It's a very short-term thing. So that's known as a holiday let. So there are special mortgages for these. So that's why it's called a holiday let mortgage. And often it's called a furnished holiday let mortgage because these houses are furnished as well.
Yeah, I feel like holiday lets or staycations have become quite popular since COVID. What do you think?
Yeah, it is. Obviously, the number of inquiries that we are having on holiday lets have increased over the last couple of years. But a lot of people have been kind of stuck in the UK and not being able to go outside. Some people by choice, they like to stay in the UK as well. But they do take a break in the UK and quite often they take a house somewhere close to the beach. So that's why it's sort of become very popular.
Yeah, so I guess there's obviously a benefit of having a holiday let. I feel like there's some sort of tax benefits there. So What kind of benefits do you get with a holiday let, Ifti?
Okay, so tax benefit is another thing. That's why people are interested in the area because some of our clients have been put off by some of the buy-to-let rules, the tax rules, which came into effect from this financial year. But those benefits are sometimes available in things like holiday lets. So with a holiday let, there are some conditions you have to meet for sure, right? So long as you can meet that, the interest is deductible in full. Now, if you take a standard buy-to-let, what usually happens is the interest, if you're a high taxpayer, it's not deductible in full. HMRC will allow you to claim something like a 20% rebate, but apart from that, you cannot deduct interest anymore against your profits. But whereas on a furnished holiday let, they allow you to sort of do that, provided you meet certain conditions, HMRC will allow you to deduct it in full. And also, there are sort of other benefits as well, like the capital gains work in a different way. There's something called rollover relief. There is another video which we spoke about this one. So you probably want to look at that video as well because that talks about the tax elements in full. There'll be a link at the bottom of this video. So you can go through that video as well and have a look at it. It talks more about the tax benefits of this.
Okay. So then holiday let options, are they available with all lenders or is it just kind of a specialist market?
Yeah, it's a very specialist market because most of the high street lenders, they are sort of more interested in your typical residential mortgage or a buy-to-let mortgage. So this doesn't fall into both of those categories. So there is a separate specialist area for this. If you look at the providers, they are mainly building societies, right, who are regional based, right? So they are the ones who provide this kind of facility. So it's not available from all lenders. So it's a very small niche, right?
All right. So in terms of lenders, are there any properties that lenders don't like using it as a holiday let that people might want to stay away from?
Yeah. So you have to be a little careful because what happens is when you look at buy-to-lets, they are generally open for houses and leases and things like that. But a lot of people come to me saying, there's a park home, right? In a holiday park, whether we can do. So those are kind of things that these lenders will stay away from. Also, lease, we have to be a little careful. Most lenders will allow you to do a lease, but some lenders might want you to put a slightly higher deposit, right? Because I know a lender who says you got to put about 40% deposit instead of 25% deposit. So that makes it a little bit more difficult. So you probably want to check that first before making any offers.
Leaseholds, so say like with a flat or something, you're saying, potentially?
Usually, that's right. So usually in England, flats are generally leaseholds. So, these holiday destinations sometimes have, right, close to a beach, there might be a flat, right? So that sometimes can be a problem with certain lenders. It's not all, but certain lenders. So that's why I always say, double check this before you make offers, because you don't want to be in a situation where you made an offer but you can't fulfill your commitments, right? So you just don't want to double check before you do anything like that.
Yeah, okay. And I'm sure everyone is dying to know what kind of interest rates there are for holiday lets.
Right. So interest rates on the holiday lets are slightly higher than a buy-to-let rate. Through my sort of experience, it's about 1% more. If a buy-to-let interest rate, I'm just taking an example here, is 2%, you probably pay about 3%, right? So it's a little bit more because the risk component for the bank is slightly higher, because there might be times where there aren't any occupiers. Also with short term, sometimes because there's high turnover where people come and go, you sometimes end up with more damages sort of thing, right? So the risk profile is slightly different. So therefore banks would like to charge you a little bit more. So it's generally about 1% more than the usual.
Thanks, Ifti. So then, in terms of minimum income requirement, is there one for holiday lets? How does it work?
Again, it's very lender specific. We know with buy-to-lets, in general, most lenders require 25,000 minimum income. 25-30 should be okay with some lenders, but I know some lenders want a bigger income as well. So the problem you find is, this is why lenders are a little bit more reluctant to give with smaller incomes. Because with holiday lets, there will be down times, right? For example, you might have a bad year because it's a business. And, if the weather is bad, people might decide, okay, I don't want to go to the beach, right? So I don't want to go on holiday. So you might have down times, right? So then you got to pocket out, right? Because you have no income. So the banks will want to make sure that you have additional income to be able to cover that, right? So that's why, banks might be a little bit more cautious when it comes to this area. So you may want to sort of show more than 25,000 income, which is sort of standard in the buy-to-let space, because a lot of lenders say you need to earn 25,000. But here the requirement might be more with some lenders.
Okay, thanks, Ifti. Do you have any other points that you'd like to recommend for everybody?
Yeah, of course. This area is getting very popular. But, saying that this is a very sort of niche area, a new area, you probably want to look at the tax advantages you have here and probably consult a tax specialist as well before embarking on this area. It is a business where you are sort of a little bit more involved, because with buy-to-lets, you sort of generally find a tenant who generally stays on for 6 months, maybe a year. But here, your tenants will come and go, right? So therefore, it's very different, right? So it might be a little bit more hands-on, and there might be more maintenance that you have to do. So it's not for everyone, right? So you probably want to do a little bit more research before getting into this area, see whether this is something that you're comfortable with, and you might want agents involved, because you'll be lucky if you can find a holiday let where you live, sort of thing, where you can go and look after the property. You're lucky if you live close to the beach or something like that, but otherwise, generally, a lot of people that I have worked with, they buy properties which are like far from where they live, because one of the benefits they do have is when there's downtimes, they go and stay in the property as well, right? Because that luxury they do have. So, it's all nice, right? Because I would like to own a property close to a beach as well and, enjoy it during the summer. But, you got to look at the wider picture. Consider all these before you go on this. But the popularity has definitely increased over the last few years.
You just reminded me of something. Is there sort of a maximum amount of days that you can stay at the property for yourself?
We have to check with the bank again. Different banks will have different conditions. Yeah. But
just to be aware to people, they need to check, right? Because you can't just stay in it as long as you like.
Oh, no. Yeah, that's not the idea. You have to rent out, because bank will want to see some income coming through that. But to qualify as a holiday let, what you need to be mindful is HMRC has certain conditions, right? Which again, I've spoken about in the other video that we did. But to summarize, the house should be available to the public for 210 days a year, and the house should actually be occupied for 105 days. And a maximum you can give to a particular occupier is only 31 days. So just be very mindful of that, because that's one of the conditions that you have to fulfill for you to qualify, right? So you have to let it out for the outsiders for sure, right? And how many days you can stay, that's something we have to check with the bank, because it depends from lender to lender.
All right, well, thanks again, Ifti, for some more great advice. I just wanted to put our regular reminder out there that these points may or may not be applicable to everybody, so please do check with an advisor if you're unsure. And if you don't have an advisor, I will leave our WS contact details below, as we are always more than happy to help. Another little reminder that as a property is secured against your home, it can be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.